Hey students, we're starting into Chapter 4 this week and learning the following objectives. We're describing the role of closing entries in the preparation of financial statements. We're preparing closing entries, and we are learning how to prepare reversing entries. As a reminder, there are 6 steps to closing the books at the end of each period. And you might remember the topic of periodicity from Chapter 1. Go back and look that up if you don't remember what it is. But there are 6 steps in the accounting cycle as we end the period. First, we analyze transactions from source documents to decide which accounts to debit and which ones to credit. We journalize transactions, we post entries to the ledger, and we prepare a trial balance. And we've been doing that the last couple of chapters. We make end-of-period adjustments, and we prepare an adjusted trial balance. We prepare financial statements. All those things we're familiar with now. Now, we add in this last step, closing the accounts and preparing a post-closing trial balance. You may be asking yourself at this point, why do we need to do closing entries? Well, closing entries accomplish 2 purposes. First, they clear all the temporary accounts, and we're going to talk about a temporary account in a minute. And then they transfer the net income or loss to the owner's capital account. In other words, closing entries at the end of the accounting period give us a way to start over, sort of wipe the slate clean before jumping into the next period. Let's talk about a very specific temporary account called the income summary. Its purpose is to provide a place to summarize all the revenues and expenses from the period. It's just a holding place. It's used only in the closing process and never appears in the financial statements. Like I said, it's just a place, a temporary holding spot to be there while we close the books. Alternately, permanent accounts are balance sheet accounts whose balances can extend past the end of the accounting period and into the next one. So temporary accounts, permanent accounts. Again, closing entries, though, serve 2 different purposes. First, they clear revenue and expense accounts to 0, so that these accounts may begin accumulating the components of net income for the accounting period. And then second, those closing entries, they summarize periods of revenues and expenses by transferring the balance of revenue and expense accounts to the income account. And then balance of the income account that's transferred to the owner's capital account. But here's how the sequence works for the closing entries. First, you close the revenue accounts by either debiting or crediting the income statement, that temporary account. And then 2, you close the expense accounts by debiting or crediting the income statement temporary account again. And then 3rd, you close the income summary account, that temporary account, you close it, and you either debit or credit the owner capital account, either based if it's a gain or a loss for the term, for the period. And then you close the withdrawal account by debiting the owner capital. These closing entries are shown in the text and in week 3's Canvas module. It's labeled Materials for Success. And again, read about it in section 4-4 of the course text. All right, one last type of entry to learn about for this week, reversing entries. Reversing entries simply set up some of the accounts for use in the new accounting period. A formal definition for reversing entries from the text says it this way. Reversing entries are an optional journal entry made on the first day of an accounting period that is the exact opposite of an adjusting entry that's made at the end of the previous period. The whole purpose then of a reversing entry is to make life easier on accountants and bookkeepers to restart those accounts in the new accounting period with the correct, leftover amount, if you will, from the previous period. So, section 4-5 describes the reversing entry, and it's also in the Canvas module labeled Materials for Success there in week 3. All right, that's all I'm going to hit you with right now. Please read section 4-1 through 4-5 of chapter 4 to better understand those details. And remember, God is on his throne. He's always been there, and he's always going to be. Have a great day.